Hello, this is Japanese Economic Review Channel. Today we'll explore Japan's 2026 energy crisis, triggered by the Middle East conflict. Our extreme 95% reliance on Middle Eastern oil is now a critical vulnerability. We will decode the delayed impacts hitting us this summer and discuss strategic defenses for businesses. In April, our crude imports plummeted by half due to the Hormuz blockade, yet daily life seems normal. This is an illusion. The WTI crude price spiked to over $100, but institutional billing lags hide the reality. The real financial shockwave is silently traveling toward us. To counter the blockade, global and domestic reserves are being drained. Japan has reduced its stockpile requirements and released national reserves, dropping buffers to near 200 days. However, these are temporary painkillers, projected to run dry exactly when cooling demand peaks. Energy costs move on different clocks. Gasoline reacts immediately, masked by government subsidies. Conversely, electricity has a 2 to 4 month lag, and city gas takes 3 to 5 months. The geopolitical shock of March will undeniably strike utility bills exactly between July and August. Even without fuel price hikes, base rates are rising. Government subsidies for electricity and gas ended in May. Furthermore, the renewable energy surcharge hit a record high of 3 yen and 98 sen per kWh. This creates a steep, unchangeable baseline cost increase for all businesses. This summer we face a triple threat: the removal of subsidies, the delayed fuel shock from March's oil spike, and a forecasted record heat wave will converge. This lethal combination of highest ever base prices and highest ever cooling demand will push costs into the danger zone. For market-linked contracts, managing total monthly usage isn't enough. The trap lies in the evening. As solar generation drops, lingering heat drives heavy cooling demand, relying on expensive thermal generation. Wholesale JEPX market prices will multiply rapidly when you need power most. We must plan for multiple scenarios. A relaxed scenario assumes diplomatic progress. The base scenario sees conflict stagnation with heavy subsidy burn. The stress scenario envisions sustained Hormuz closure, pushing gasoline over 200 yen and causing extreme electricity spikes. Let's quantify the damage. A standard household might see August bills hit 18,540 yen. More alarming is the business impact. A mid-size factory facing a stress scenario could see monthly electricity costs jump to 4.58 million yen. Variable adjustment costs will devastate profit margins. Japan is scrambling to replace the drop in Middle East imports with US and Latin American oil. However, this causes new bottlenecks: longer transit times, freight cost spikes, and refinery-grade mismatches. Alternative sourcing secures volume, but guarantees sustained upward pressure on costs. With physical routes blocked, institutional pipelines emerge. Japan's joint stockpiling agreements allow stranded producers like Kuwait to liquidate overseas assets. By exercising priority purchase rights, Japan secures physical oil and provides crucial cash flow to producers. The crisis extends beyond energy. Logistics faces margin squeezes as diesel costs rely entirely on crude rates. Meanwhile, the petrochemical sector is starving. Naphtha imports crashed by 72%, dropping ethylene plant operating rates to a record low of 67.3%, choking fundamental materials. Simply using less energy is no longer a viable defense. The new paradigm is energy defense, focused on time shifting. We must buy power when it's cheap, utilize storage during expensive peaks, and actively monetize grid stabilization through demand response, doctor, and VPPs. To survive, businesses need a decentralized microgrid architecture. This involves combining solar generation with battery storage and EV assets. These are not just for blackout protection. They are daily financial hedging instruments against price volatility and geopolitical shocks. Finally, survival requires proactive monitoring. Track these 6 tripwires: government subsidies, weather anomalies, global benchmarks like WTI, strategic reserve levels, grid reliability, and JEPX market data. Continuously update your position based on these indicators for a robust defense. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.